Okay. I wanted to make a video to talk about something that not a lot of people talk about. It's something that might be on your mind and might not be. I wanted to bring in an expert to validate my theories and talk about taxes. There's a lot going on this year. A lot of stuff's on people's mind with, 2020 being insane. Some businesses have struggled. Some businesses have had massive success. And if you're on the track to having massive success, especially being consumer products or a product-driven business, one thing to consider is what should you do with those profits to not only save you some money on tax season next year, but prepare for the future of your company. And my name's Jason Klug. I got a full-service product development company called Klugonics. And then I have Ryan Rees here, who is not only my CPA, but he has an accounting firm of his own. Go ahead and tell us a little bit about yourself, Ryan.
Yeah, so I'm Ryan Rees. I'm a CPA, Salt Lake City area. I do taxes for people nationwide. Most of my clients are probably just like you guys that are watching this video today, small businesses, $2 to $20 million in revenue range is the main client. In really any industry you could think of. I've been doing this for 16 years and pride myself in being in more of a proactive CPA than a reactive CPA, and spend a lot of my time in November and December of every year tax planning with my clients to make sure we can mitigate taxes as much as possible.
Great. And Ryan has helped me the last few years, and I've had other CPAs, and it's been very helpful to have his mindset, before, during, and after every tax year. So one thing that we wanted to talk about in a direct-to-consumer company or a consumer product company that sells in retail, you're profitable, awesome, that's great. But what should you be doing to prepare for tax season, or what's one thing you can do? And what I like to suggest is, why not add your next product? You might have one or two products that are on the market, and that's great. But my experience with direct-to-consumer brands, which I have one myself called Dry Home, is we've added more products, and that's grown our revenue. So adding a new product is, yes, not only investing in the future of your brand, but it's a great way to write off some of that profit and invest in the future. So I wanted Ryan to help me validate that. So Ryan, can you tell us how that works on the tax side of things?
Absolutely. So, and this is what I was talking about that I do a lot in November, December, is we take a look at your situation as a business and where you are year to date. There's a lot of things that happened in 2020. And just like Jason mentioned, there are some companies that are not doing well and probably don't have a lot of tax problems that they have to worry about. But there are some that they're having record years. And then you add into that these PPP loans. If anyone's gotten the PPP loans, originally expected to be non-taxable, IRS has come out and said, sorry, it is taxable. And so you may have an unexpected income that you weren't planning to pay tax on originally. And so really going back and looking at your business, looking at your year-to-date revenue and seeing where you're at, so that we can get an idea of what your tax exposure might be. Because if you do have a tax liability, Jason's absolutely correct. Depending upon your type of business and what you're doing, there are a lot of things you can do to lower or mitigate that tax liability before the end of the year. One of those being investing in new products. If you've got, and one of those investment items is research and development. So if you're trying to kick off a new product, you can spend that money now. And in certain cases, and this is something that you'd have to look at on a case-by-case basis, company by company, not only is there an expense where you can lower your taxable income, but there's a federal and in some cases state research credits. A credit is much better than an expense, where you get a dollar for dollar reduction in your tax liability based upon those expenses that you spend. Again, there's a lot of criteria that I don't want to go into on this, but basically, if you've got risk of uncertainty, if you're using some sort of process of experimentation and some sort of technology in nature for a qualified purpose, and we can go into each of those in depth, but that's not what this is for, then you likely have qualified research expenses that you can not only deduct, but get a credit for on your federal and state income taxes.
That's like, that's music to my ears. You know, my company, we develop these products for customers, businesses, brands, individuals that are starting a new company, you know, et cetera. And, you know, this time of year, you know, a lot of times, you know, clients will tend to forget, you know, what to do with their capital, or you know, they'll buy inventory and stuff like that, which is great, especially if you're manufacturing in China before the Chinese New Year. But really, timing wise, it's a good time to start developing a new product because of, you know, how long it takes to go through the process and so on and so forth. So give me an example of an expense that you could put your money towards that might not be as beneficial for you when it comes to taxes, over product development.
Product development is one of the best, because the applicability of possibly being able to utilize an R&D credit. Other expenses are, if they're valid business expenses, they're all going to reduce your taxable income the same. So except for like meals and entertainment. Meals are only 50% deductible. Entertainment is no longer deductible. And so you've got to look at this and say, you know, would I rather spend money on going out and purchasing a new truck, or would I rather spend it on research and development? The truck is going to be a deduction for you, but it's not a revenue generating deduction that hopefully you're going to be able to profit on in the future. An R&D credit, R&D expenditure will reduce your taxable income in this year, but hopefully bring on a new product line to make you income just into the future as well. So there's deductions that are, I just want to save taxes deductions, and there's deductions that are going to further launch your company and your product into success in the future as well.
That's great. Yeah, and especially when it comes to, you know, even if you're doing a small portion of the development process to get it started for the following year, because obviously starting a product now, you can't finish the entire development between now and, you know, December 31st, right? But the things you can do is go through a conceptual design process, maybe do some of the initial engineering. And what we've decided to do at Klugonics to help some of these companies and these brands, you know, where it's more beneficial for their taxes, is through November, we're going to allow for customers to pay for more of the process up front. And, you know, we'll pay the taxes on our end, right? Because it's I mean, we're willing to take that hit to grow our company, because we've got a lot of new team members and a lot of new bandwidth, and we'd love to fill it with new projects. And what a great way to do it than to kick off the new year with some new products and projects that we're working on. So, you know, some of the things to consider is how much money does it cost to develop a product, right? Usually the development process can cost anywhere from, like, you know, 15 grand on the low end for a simple product up to, you know, hundreds of thousands of dollars, right? So those are things that you'd have to consider. But let's say, you know, you've done a decent amount of profit in a year. You know, it's probably worth spending, you know, 15 or so grand to get the process started and finish the year with that concept. And then throughout the following year, you can invest in the next phases, like making, you know, prototypes, getting manufacturing set up, pay for tooling and stuff like that. And, you know, that being said, what part of, you know, when it comes to like tooling and investing in a production run, is that tax deductible right now? So if I was to pre-buy a bunch of inventory, how does that help when it comes to taxes?
Yeah, so depends upon your situation as a taxpayer, if you're cash or accrual basis and how you're filing. But yes, for the most part, a lot of those expenses that if you pay for them, and most of the clients that most of the taxpayer in the country are cash basis taxpayers, so you can pay for that in this year and have the actual work being done on it, into 2021 and get that tax deduction now. And if you are an accrual basis taxpayer, you could still actually take those deductions because research expenses are deductible in the year that you're actually paying the expense, as opposed to having to amortize it, capitalize and amortize it over time.
Yeah.
That tax law does change. The tax cuts that Trump enacted are set to sunset, and beginning in 2022, I believe, you're going to have to start amortizing those. So now is a good time to start getting those research credits into your books.
There we go. So basically, all of this summarized, let's start a new product. And if you need help making sure that all of the, when you're filing for your taxes and everything is done right, you're getting the proper credits, all the expenses are allocated properly, you can talk to Ryan and he'll take care of you, because he works on all of the stuff I do, and we do obviously a lot of R&D and product development and all that stuff. So I'm pretty confident he can help you guys as a brand as well. So follow the links below for our website, for Ryan's website. We're going to run this tax savings promotion through November. If you sign up on our website, we'll reach out to you. We could set something up and we can figure out what you could do with your profits in 2020 to make 2021 and beyond much better than this year has been for everybody. So thanks for watching.
Thanks, guys.